Has the correction begun and could it be translated to a meltdown subsequently? I would say that technically, yes. I will also cover the fundamental side of it on the why. And as of the close of Dow Jones last Friday, 27 February, the monthly chart indicated an inverted pattern, not just in the cash market, but also the futures market. Then on Saturday, the Middle East conflict erupted once again. We will discuss how to manage these potential risks and opportunities as well. My name is Con Hao. I will study into different markets, the current market behave, how it behave, and to uncover emerging trends, the potential trending markets of tomorrow. This analysis is based on technical studies and does not constitute financial advice. Please consult your licensed broker before investing. And if we were to study throughout the monthly chart of Dow Jones since the financial crisis in 2007, and this is what we're going to do, we only saw two very distinct inverted patterns or inverted hammer. One of it is the close of February, and the other one was during the or before the COVID lockdown. And let's look at what happened here before the COVID lockdown. And let me just squeeze in a little bit here. And this is what the other one. Then it was very distinct, but of course, as time passed, it may not appear to be distinct. But later on, we're going to go through the 2008. The rally started from there, and this were the only two distinct inverted pattern that surfaced, and we saw a deep correction. So whether this correction is going to translate to a meltdown, we're going to discuss it later. So where was 2008? The 2007 and 8 meltdown was here, and I want you to take some time to observe throughout this monthly chart in this history of this bull market started since about 2008 or 2009. There's only two occasions that we saw this distinct inverted hammer, just two. And on this fundamental front, and let's study about the stock, and we're all very familiar with it, that one of the key driver of the US stock today is Nvidia. And on 25th February, its fourth quarter earnings exceeded estimates and its revenue increased 73% year on year, but its prices came off. And this was the announcement date. It ran up quite a bit, and subsequently the next day it came off, and today it still stay under pressure. So when we see this market surge on good numbers and subsequently sell off, it suggests that investor believe the market has already priced in these numbers at a point in time and are taking the opportunity around here to offload their holding in AI related stocks. But why? Now, I believe that most investors feels that there is a lack of clarity of the next few quarters performance and a lack of clarity of the sales to China. And it is affecting the AI growth story for the time being. So why the correction has begun after the close of February? And let's look at our tutorial during November last year. So then I was a bit suspicious that things are getting a little bit dicey. And where was November last year? And this is where we studied into the NASDAQ. We saw that it crossed below this uptrend line. And Microsoft, there's a potential double top. And Apple, there's a divergent. And Nvidia, we saw a bearish engulfing body. So back then, we suspected something's going on, but I can't just get a confirmation on the four major indices, which is Dow Jones, NASDAQ, S&P, and Russell. I just can't get a clarity on that. But the major stock market, we saw it very clearly. And where's Microsoft today with double top, it came off. And Apple is not doing exactly well technically, is reacting quite nicely to this divergent. And Nvidia, and we just discussed about it, is facing some pressure. And then potentially seeing there's a head and shoulder as well. So this was what we have studied. And then I was taking a very cautious approach. Why? Because I couldn't get a confirmation on the technical on the major four indices. But today, the story is a little bit different because on the monthly chart, February closing, we saw an inverted hammer in the Dow Jones. And on the fundamental, that AI growth narrative is starting to face quite a bit of pressure. Also, the renewal of the Middle East conflict is not helping. And my plan as an investor, it will be to lighten up my existing positions unless in the coming months it close above the February high. Any of the coming months, if it close above the February high, I will assume that the bull market will resume. But as of now, I will keep my holding pretty light. And for the time being, the I suspect that there's a likelihood that the market will continue to trend lower, and this will be my trading plan. And let's look at it more intimately on this futures chart, and I would like to go to the daily chart, and we could see that on the monthly perspective, we could see that February closing was an inverted hammer. But if we're going to draw this uptrend line, is reacting pretty well, including today. Today, as the time I produced this video, it is on the Tuesday, my Tuesday in Singapore timing here. And I'm going to observe it down here. If it's settled here, I think there's some support. But if the support will be broken, say for example, the next few days, if it close below this uptrend line, and I do suspect that in time to come, we may see a development of a further downtrend or correction, but correction may lead to a meltdown. So we have to be keep on keeping track of what's happening here. So could this be a correction or a meltdown? A meltdown derived from its initial correction, which is maybe is going to happen. But if it run deeper, it will become a meltdown. The good news is that we have identified early in its correction phase. We should be able to, or we should be in good position if it ever transit into a meltdown. Feel free to leave any comments below. I love to exchange ideas with you on what is about to come. Really happy that I stay through this tutorial. You have many great trading weeks ahead.